Hello all of you, I hope you are doing good. So what we will do today, we will revise whatever we have discussed in our previous session. In our previous session, we discussed about the Schedule 3 Part 1, that is of balance sheet. So we'll discuss about the format of balance sheet, we'll do the revision here and then we'll start solving with question number 2. Okay, so in balance sheet that we have, we know that equity and liabilities, the shareholders, the fund is there. Okay, so equity we call them shareholders fund, share capital, reserve and surplus. So what we discuss in share capital, anything that which we issue other than cash consideration, that much number of shares we have to show in a inner column. Just for the information purpose, we show them this much of shares we have issued other than cash consideration, and calls in arrears should be deducted from share capital. What about the reserve and surplus? When we talk about the reserve and surplus, all reserve and surplus, we write it down under the reserve and surplus. If there is a loss during the year, we show them as a negative figure. Okay. Even when we do the total of all these reserve and the surplus, and suppose there is a loss, even if the outer column it is coming negative, no problem, we'll write it down as a negative. Okay. Whatever I have highlighted here, we discussed in our previous session, but no need to write it down that here, because generally they don't ask on these points. Okay, so non-current liabilities, then long-term borrowing. If any borrowing which I am liable to pay after one year, we call them long-term borrowing. But remember that the portion of the long-term borrowing which I am liable to pay within 1 year, that is going to come under short-term borrowing. Trade payable, anything which we purchase on credit. Other current liabilities, okay, any, for example, salary payable, dividend payable, interest payable, okay, all these are other current liability because they don't have any specific heading here. Any provision which is the short-term provision, for example, provision for tax. Then on asset side, two type of asset, non-current asset and current asset. Okay, what we discuss in non-current asset, three things: PP, property, plant and equipment, intangible and non-current investment. Okay, then current asset, inventories, trade receivable, cash and cash equivalent, short-term loans and advances, other current asset. If there is no specific heading here, so that is going to come under other current asset. Like you can say that here now in other current asset, for example, interest, accrued interest receivable. Okay, I'm not saying payable, interest receivable. Okay, that is going to come here. Okay, anything for which there is no specific heading here, that is going to come under other current asset. Okay, now then also we discussed this adjustment that you remember that I discussed with you that here now this first point. Okay, in repetition is page number 9. So it says equity shares were issued for consideration other than what? Cash. So any shares issued other than the cash, that we have to show in an inner column or in a notes to account, that is share capital. I mean to say inner column notes to account number 1, share capital. Trade receivable, if due for more than, they will give us in question. So we have to mention them how much trade receivable is due for more than 6 months and other amount. The cost of asset, they will give you as an additional information. So in PP notes to account, we are going to mention cost, original cost, accumulated depreciation and WDV. Accumulated depreciation will be a balancing figure. Now loan account is inclusive interest accrued but not due. So they will give you the loan amount. It's a long-term borrowing, but they will give this much amount with interest accrued but not due. That is other current liability. That portion interest component will show under other current liability and remaining will come in long-term borrowing. Okay, now balance at bank include rupees which is not a scheduled bank. So it is mentioned that how much we have with scheduled bank, how much which we have other bank, that is which is not a scheduled bank. So we have to write it down in other bank, and this will come with the scheduled bank balancing figure will come. For example, if they give you 1 lakh rupees as the total balance in bank, 80,000 with other bank means which is not a scheduled bank. So 20,000 with other bank. So automatically this 80 will come here as a balancing figure. Okay, so we have to mention how much with scheduled bank and how much with other bank. Then I think this also covered in previous session that certain amount that we transfer to general reserve. So from where we are transferring? From the current year profit. So but we don't go to penal account. In a reserve and surplus only, we deduct from profit and loss account balance and we add to general reserve there. Okay. Now we will come here to question number 2. Okay, little bit lengthy but interesting question. So what it says that here now, it says that here, first of all, it is in IC study material question. It came in May 2018, similar in RTP November 2023. The question is on balance sheet. Now on 31st of March 2018, SR Limited provide the following ledger balance after preparing its profit and loss account for the year ended 31st of March 2018. What does it mean that after preparing its profit and loss account? It means they have already prepared the P&L account. So they are asking us most, they will tell us that later on you will see to prepare the balance sheet only. Okay. If they have already prepared the profit and loss account, what does it mean? They know how much is the profit that they have during the current year. They will mention you in this trial balance that year. Okay. Now here, equity share capital, fully paid up shares of rupees 50 each, 80 lakhs. Cost in arrears 15,000. Land 25 lakh, building 30 lakh, plant and machinery 24 lakh, furniture and fixtures 13 lakh, securities premium 15 lakh, general reserve 9 lakh 41,000, profit and loss account 5 lakh 80,000. Loan from Public Finance Corporation secured by application of land 26 lakh 30,000. Other long-term loan 22 lakh 50,000. Short-term borrowing 4 lakh 60,000. Inventories that now they have mentioned the inventories here. Okay, inventories here is finished goods that here, that is 45 lakh, raw material 13 lakh. Then they have trade receivable 17 lakh 50,000. Advances short term 3 lakh 75,000. Trade payable 8 lakh 13,000. Provision for taxation 3 lakh 80,000. Unpaid dividend 70,000. Cash in hand 70,000. Balance with bank 4 lakh 14,000. So this is total of the trials. You know that enough. Always this debit balance, okay, it will be asset only. And here it will be liability and equity. Okay, I have not written expense and income because P&L account already prepared. So there are no balances of expense and income here. Okay, now they say here, the following additional information was also provided in respect of the above balances. What they have provided here, 50,000 fully paid equity shares were allotted as consideration for land. It means something other than cash consideration. I will discuss with you all this one. But you have to give the reference that here now in point number 1 that they have mentioned about the equity. You can see that equity share capital, I am giving the reference of point number 1. Okay. Then we have a cost of asset. We are building 32 lakh, plant and machinery 30 lakh, furniture and fixtures 16 lakh 50,000. Something about the PP. So that they have mentioned about these items in point number 2. Okay, in point number 2. Okay, okay. Then trade receivable for rupees 4,86,000 due for more than 6 months. So something about trade receivable. Okay. So trade receivable that now they have mentioned in point number 3. Then we have balance with bank include rupees 56,000. The Naya bank, which is not a scheduled bank, something about the bank balance. Okay, balance in bank. So you can see that at the end here, balance with bank, point number 4. Okay. Then they say loan from Public Finance Corporation, which is repayable after 3 years. And they say here, I will come to this long-term borrowing. The balance of rupees 26 lakh 30,000 in the loan account, which is Public Finance Corporation, is inclusive of rupees 1 lakh 34,000 for interest accrued but not due. The loan is secured by application of land. Basically, point number 5th and 6th, it is related to long-term borrowings. So in point number 5th, they mentioned that it is repayable after 3 years. It means a long-term borrowing, and something is interest is inclusive in that here. So that interest part will write it down in other current liability. So point number 5th and 6th related to long-term borrowing. This is okay. Loan from public finance. So I will write it down here. Just point number 5th and 6th. Okay. Then we have here the other long-term loans unsecured includes that loan taken from Nixus Bank, that is 13,80,000. Amount payable within 1 year, 4,80,000. Within 1 year means what does it mean? That any principal amount which I am liable to pay within 1 year, it is this portion will be short-term borrowing. Okay. And here this will come in other current liability. Okay. Now loan taken from directors, 8,50,000. Okay, but they are talking about other long-term loans. Is it mentioned other long-term loan anywhere that here? Other long-term loan. Yes, you can see that here in trial means other long-term loan. So it is mentioned in point number. It is mentioned in point number 7. Other long-term loans right now. Then they say bills receivable for rupees 1,60,000 maturing on 15th of June 2018 has been discounted. Now this is new point to you. And I will discuss with you at the end of the question that because it is not going to appear in my financial statement. It will not appear in balance sheet. What is this? I will discuss with you. I highlighted this. I will discuss with you at that. Now, short-term borrowing include loan from Naya Bank 1,16,000 and loan from director 48,000. Short-term borrowing. So point number 9. Is a short-term borrowing mentioned? Yes, this is short-term borrowing, point number 9. Then we have here transfer of rupees 35,000 to general reserve has been proposed by the board of directors out of the profit for the year. So this type of the item came in the previous question only. 35,000 we have to transfer to general reserve. So general reserve, point number which point number 9. Give the reference point. This is how you have to solve in examination. Okay, point number 9. Now inventory of finished goods include loose tool costing rupees 5 lakh which do not meet the definition of property, plant and equipment as per AS10. So don't worry, you'll say what's our AS10? We have not yet covered. Don't worry, I will explain you. Okay, the inventory, point number 11 is related to inventory. You can see that this inventory, point number 11. Okay, then here they ask us that you are required to prepare the balance sheet of the company as on 31st of March 2018 as required under part 1 of the schedule 3 of the Companies Act. So they ask us to prepare what? They ask us to prepare the balance sheet. So now before we start solving we'll draw the format and all that here. Okay, I will discuss with you each and every point. But what is important that here we have to know that here now the notes to account. So if you remember, I told you in previous session, 4 is fixed. We have to prepare. First of all, some will come on equity side. Some will be of, just give me a minute. Okay, some will be on liability. Okay, and some here on asset. Okay, now understand this point. It is fixed that we are going to prepare on share capital, reserve and surplus, and long-term borrowing, and your property, plant and equipment. These 4 are fixed. We are going to prepare in every question. Share capital, okay, reserve and surplus, long-term borrowing, and property, plant and equipment. Okay, now understand this. Now what we have to do now? We have to see the adjustment. The one is on here. You can see that now they are asking if one is on what? Share capital. We have already prepared share capital. The cost of asset is on PP. We already prepared on PP. Then we have trade receivable. So we'll make on trade receivable. That will come under current asset. So trade receivable here now. Trade receivable. Okay. Then your balance with bank. So the balance with bank, there is a part of cash and cash equivalent. So I will write it down here. Cash and cash equivalent. Like that we have to decide. Okay. Now loan from Public Finance Corporation, it's a long-term borrowing. So we have already prepared long-term borrowing. Okay. But remember that now this is the part of other current liability, the portion of interest. Okay. The interest accrued but not due. So other current liability will prepare here, other current liability. Okay. Then we have here now is then the other current liability, which is okay. Then we have here, it is okay. Remember that now it's other long-term borrowing it is, but this portion is short-term borrowing, which I'm liable to pay within 1 year. So notes to account on short-term borrowing as well. So I will write it on short-term borrowing here. Okay. Then we have here is this point. Okay, not relevant. I will discuss with you, but it is not going to affect my balance sheet. Now short-term borrowing, we have already prepared. Transfer of reserve, general reserve and surplus. We have this is inventory. So we have to prepare on inventory as well. So write down there now inventories. That's come before inventory. Now certainly what happened that as we have decided here, how many notes to account? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9. Okay. So this is how I'm going to decide that here. But at the end also just quickly go through the trial balance as well. Certain time there are items that we have to put, and I told you that short-term provision also is very important because provision, it is not necessary. First of all, we have decided 9 notes to account. It is more than sufficient when you prepare balance sheet. These, suppose you also decided these 9 notes to account, there is no problem in that here. But as I can see that here now, there is a point on the short-term provision as provision for taxation. This is short-term provisions. Okay. So if you have not prepared a notes to account short-term provision, it's okay. You can write it down in balance sheet directly under the short-term provision. Write down provision for tax. It's perfectly fine. No problem in that. But if they have mentioned provision for tax, also certain time they give an adjustment as well. That is. So it is important. So we can prepare short-term provision. So I will write it down short-term provision. So how many notes to account we are going to prepare? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So how many notes to account we are going to prepare? 10 notes to account we are going to prepare it. Okay, you got the point here? So we are going to prepare 10 notes to account here. Okay, you got the point? Not necessary. How it is a short-term provision? Not necessary. But it is important. It is mentioned trial means a provision for tax as well. So it's better to make it. Okay. So these are the 10 notes to account we'll talk. But I told you in our previous session also, it is not necessary that here. I'm going to say if I have decided here 10, not necessary, you're also going to decide 10. You might decide 11. You might decide 9. It's okay. 1 or 2 here and there, it is okay. No problem in that. Now, what we'll do that, we'll draw a balance sheet and all these notes to account. Okay. Now, write down there. Now, question number, okay, write down there. Question number 2. What is the name of the entity? SR Limited. So write down here SR Limited. Balance sheet as on 31st of March 2018. Balance sheet as on 31st of March 2018. Okay. Draw for one page. Keep the space of 2-3 line at the end. Okay. One note we are going to write it down there. Okay. Now write down there now. Okay, now write down there now. First here, equity and liabilities. Equity and liabilities. Shareholders fund. Okay, first, how we write it down? We write it down. Shareholders fund. Okay, first point, A point, share capital. B point, reserve and surplus. Okay, B point, reserve and surplus. Then non-current liability. Non-current liabilities. Long-term borrowings. Then we have current liabilities. Current liabilities. Okay, under current liabilities, write down. Now you can see that these 4 items we are going to write it down. What are the 4 items that here now is short-term borrowing, trade payable, other current liability, and short-term provision. So write down short-term borrowings, B point, trade payable, C and D. Okay, other current liabilities, short-term provisions, short-term provisions are here. Okay, now here assets. Okay, now here non-current asset, non-current asset, property, plant and equipment, property, plant and equipment. Okay, property, plant and equipment. Then intangibles, non-current investment, non-current investment, then current asset, then current asset, current asset, A, B, C, D and E. Write on there. Inventories, trade receivable, cash and cash equivalent, now cash and cash equivalent, then we have a short term loan and advances, other current asset, other current asset. Okay, now keep this space of 2-3 lines there because one note we have to write it down at the end there. Okay, now we have decided to prepare notes account on share capital, reserve and surplus, long term borrowing, short term borrowing and other current liability, short term provision, property, plant and equipment 7, inventories 8, trade receivable 9 and cash equivalent 10. So write down these 10 notes to account number, and then what we have to do, we have to prepare these 10 notes to account. Okay, we'll give the number one by one there. Write down there 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, now after this we'll write it down all notes to account. So write down there notes to account. Notes to account number 1, share capital, keep this space of 5-6 lines. Then here reserve and surplus, always in reserve and surplus keep more space. Okay, reserve and surplus, keep the space of 7-8 line. Then here third, long term borrowing, here in long, write down long term borrowings. Here in long term borrowings also keep more space. Okay, keep more space because secure, unsecure, hypothecation, there's so many things mentioned here. Okay, so sure, here share capital, reserve and surplus and long term borrowing, keep the space of 10-12 lines in long term borrowing. Okay, then here fourth notes to account is short term borrowings, is short term borrowings. Okay, keep the space of 6-7 lines. Then fifth, other current liability. Okay, 3-4 lines. Then here 6, short term provisions. Okay, short term provisions, that 3-4 line. Then 7, property, plant and equipment, property, plant and equipment. Here keep the space of 6-7 lines. Then we have here we have, after this we have 8, inventories. Okay, 3-4 line. Then we have trade receivable 9. Trade receivable. Okay, one more we have, that is cash and cash equivalent 9. Now write on 10th one. Now 10, cash and cash equivalent, cash and cash equivalent. Okay, write down the cash and cash equivalent. Done. Okay, now you know the strategy how to solve. I mean to say, first we read the question in examination, give the reference of all the adjustment that they have given to you, and then decide which notes to account we are going to prepare. How we decide? That 4 is fixed, that is share capital, reserve and surplus, long-term borrowing, and PP, short-term provision as well. Okay, then read the adjustment, and even first time when you're reading the question, highlight the point or underline the point which is given in adjustment. So you know that here which notes to account we have to prepare. Okay, then prepare all those notes. Give the first, write it down that which notes to account we are going to prepare, and then draw this balance sheet and all the notes to account. On an average 5 6 line, but in case of reserve and surplus, PP, keep little bit more space, long-term borrowing. Okay, now what we'll do that, now we have already given the references in question that here. Okay, that we know that here something is mentioned about the share capital in note in point number 1. So when we'll read these trial balance, we'll read those the adjustment as well at the same time. Okay, now one by one. Now first they mention that now is the share equity share capital fully paid up of rupees 50 each. So can you decide that here how many that here they have? 50 of rupees 50 each. What is our amount of share capital? 80 lakh. So we can say how many number of shares? 80 lakh divided by 50. That is coming 1,60,000. So we have 1,60,000 equity shares of rupees 50 each. So where it will go? It will go to share capital. It will go where it will go? It will go to share capital. Okay. But something is mentioned in point number 1. What is mentioned in point number 1? 50,000 fully paid equity shares were allotted as consideration for land. What does it mean that here? In past, you issue 50,000 shares and in return, you didn't get the cash, you received the land. So basically it is nothing but other than cash considered. This is what they are trying to tell you that here. So in past, they issue certain shares, 50,000 shares, and for that they didn't receive the cash. They receive what? They receive land. Okay. So basically they are trying to tell you that here, out of 1,60,000. How I decided 1,60,000? 80 lakhs. Okay. 80 lakhs divided by 50. So that is coming 1,60,000 shares. And out of 1,60,000, 50,000 shares were issued other than cash consideration. Okay. So where we write it down? In notes to account number 1. So go to notes to account number 1. Write down there now. Write down 1,60,000 equity shares of rupees 50 each. That is how much? 80 lakh. Now, out of the above, 50,000 equity shares have been issued other than cash consideration. Other than cash consideration. Okay, simple. Okay, now we have second. What is second point is that? Next point is that cost in arrears. What we do that? Cost in arrears, what we deduct from share capital. How much it is? 15,000. So write down there, less calls in arrears, 15,000. Then we have this, not understand, this land, building, plant, and machinery, furniture. Something is mentioned in point number 2. So they have mentioned the cost there. You remember that in our previous session we solved this type of adjustment that is okay. So what we'll do that cost will take from these additional information. WDV is given in trial balance, and difference will come accumulated depreciation. Okay, but what will appear in balance sheet? Obviously, whatever is appearing in trial balance, the same is going to appear in my balance sheet. Okay, now go to PP. Where we'll write it down? This we'll write it down here. This in property, plant, and equipment. So go to PP, notes to account number 7. Write down their notes to account number 7. Give the heading there, asset, cost, accumulated depreciation, and here written down value. Okay, written down value. Okay, so asset, cost, accumulated depreciation, and what? Written down value. So first write it down here. The land is how much here? Is 25 lakhs. So write down, this is WDV. Remember that this is, all these are WDV. Okay, original cost that they have given in adjustment here. Okay, so write down here first land. How much is the WDV which is mentioned there? 25 lakhs. So write down there 25 lakhs. Then building, which is 30 lakh. Building 30 lakh. Then plant and machinery 24 lakh. Plant and machinery 24 lakh. Okay, then we have furniture and fixtures 13 lakh. Furniture and fixtures 13 lakh. Okay, furniture and fixtures, how much it is? 13 lakh. Okay, so we have write it down WDV. Okay, but what is original cost is given in adjustment. How much is for the building? One by one. How much is for the building? 32 lakhs. So write down in building 32 lakhs. Okay, then here plant and machinery 30 lakh. So plant and machinery 30 lakhs. Then we have here furniture and fixtures, how much? 16 lakh 50,000. This is 16 lakh 50,000. Okay, now understand this point. Now the balancing figure is what? Some of you might think, sir, what about the land? Cost is not given. I will come to that. Okay, remember that the total will go only WDV because this is mentioned in trial balance. Where it is mentioned? It is mentioned in trial balance. Okay, it is mentioned in trial balance. It will go in balance sheet on. This is these costs and accumulated depreciation. This is just for the, I mean to say, the information purpose, so that the users of financial statement will get the more information. So this is given, where this is given in additional information. Additional information. And this is what? Balancing figure. Okay, now understand this one. If 32 lakh is building and WDV's cost was 32 lakh and WDV is how much? 30 lakh. So how much we'll write it down here? We'll write it down here 2 lakh. Plant and machinery 30 lakh. WDV is 24 lakhs. So how much it will come? 6 lakhs. Now furniture is 1,65,000 minus 13 lakh. That is, no, 16 lakh 50,000 minus 13 lakh. That is coming how much? 3 lakh 50,000. So 3 lakh 50,000. Okay, now please understand. There's some of you think so that, sir, they have not given the original cost on land. Correct. They have not mentioned the cost of land. You know why that they have not mentioned the cost of land? Because there is no depreciation on land. There is a depreciation on building, not on land. So whatever the WDV same is what? Is the cost only. No depreciation on land. The value of land never depreciate that way. Okay, exception is a lease and all that. Those are the exception. But in general, the value of the land not get depreciated. So here 25 lakh is the, this is the, whatever the WDV, the same will be the this original cost. Now second thing, if we go to the previous question now, in previous question what happened? The same adjustment, if I see that here, the same we have write it on the balancing figure here also. Okay, but here you say, sir, land given. No, it was land and building. So there is a depreciation on building portion only, not on land. This is the value of both of them, land and building. But they don't charge the depreciation on the value of land. They charge depreciation only on building. But here in these question, what? Here they have given the combined figure. That's why this depreciation represents only the building portion, not on the land. But here if you see that here, they have bifurcated separately to these land and building. So here no depreciation on land at all. Building there is a depreciation. Okay. Now, how we decide for a reference, you can write it how you decide this 2 lakh. Basically 32 lakhs minus 30 lakhs. Okay, done. Now again come to trial balance. Now in trial balance you can see in the next item is that securities premium, where it will go reserve and surplus. How much it is? 15 lakh. Okay, So go to reserve and surplus, write down there, notes to account number 2, write down there now, securities premium. Securities premium. 2 column, inner column and this outer. How much it is? No adjustment, write down here in outer column, 15 lakh. Okay. How much it is? Outer column, 15 lakh here. Okay. Now we have here profit and loss. This general reserve is also come in reserve and surplus, but there is one adjustment on it. I will read it, but we are going to write it down in inner column, 9,41,000. Write down there. General reserve, 9,41,000. 9,41,000. Then what says it? Adjustment number 9. Is it 9? I've written 9 here. Oh, it is 10. Okay, sorry. Just give me a minute. It's 10. Okay, 10. Do the correction there. 10. Might be I've written correctly. 10. 9,41,000. So when I go to point number 10, they say transfer of rupees 35,000 to general reserve has been proposed by the board of directors out of the profit for the year. So what is mentioned that now? That 35,000 they want to transfer to general reserve. Where they want to transfer this 35,000 general reserve. It is mentioned in question out of the profit for the, even though they don't mention, it is implied that out of the profit they are going to transfer to general reserve that here. Okay. So you have written this 9,41,000. What I will do that here, add transfer from profit and loss. Profit and loss means from the reserve and surplus, from the P&L balance we are going to transfer it here. Okay. How much is 35,000? Then keep the space of one line, then write down there profit and loss less transfer to general reserve. Transfer to general reserve. How much will transfer to general reserve? 35,000. Okay. So here show as a negative figure because we are transferring from P&L account. How much we are transferring? 35,000. So the balance of here is going to transfer here to from profit and loss account. We are going to transfer to general reserve that here now. Okay. Now what happened now here? How much it is that a profit and loss account? There is 5,80,000. This profit and loss account balance is also part of reserve and the surplus here. That is 5,80,000. So write down there now this 5,80,000. You got the point? So we deduct the profit by 35,000 and we add to the general reserve. Both are the part of reserve and surplus only, but we have to transfer it to general reserve as it is mentioned in question. Okay. Now here the loan from Public Finance Corp. If you want, you can do the total also. They offer this 9,41,000 plus 35,000. That is coming 9,76,000. Here 5,80,000 minus 35,000. That is coming how much? 5,45,000. Okay. Now go to adjustment then. What is mentioned that here loan from Public Finance Corporation we do, which is secured by application of land. And we know that we have to specify what we have to specify that if any secured or unsecured. So you can, as you can see that, which is secured by the application of land. This is basically is a secured loan. So our total amount is 26,30,000, but it is mentioned in point number 5th and 6th. So what we'll do that? We'll read point number 5th and 6th. So when I go to point number 5th, it is mentioned that loan from Public Finance Corporation, which is repayable after 3 years. What does it mean? They're telling it it's a long-term borrowing. Okay, it's long-term borrowing. But they say that here now, the balance of rupees 26,30,000. You can see that here, the 26 lakh. You can see that now. How much is the balance? 26,30,000. The balance of rupees 26,30,000 in the loan account with Public Finance Corporation is inclusive of rupees 1,34,000. So how much is inclusive of rupees 1,34,000 for interest accrued but not due? So what does it mean that here out of this 26,30,000, this 1,34,000, it's the interest accrued but not due. It's a nothing but a other current liability. So what we'll do that here, this 1,34,000 will deduct from 26,30,000, and these 1,34,000 we show as a other current liability. Simple. Okay. Now go to here, long-term borrowing, notes to account. Notes to account number 3. Write down the secured. Secured. Write down loan from Public Finance Corporation. Loan from Public Finance Corporation. Okay. Now understand this. Okay. So you can write it on bracket. It is mentioned. So repayable after 3 years. Repayable after 3 years. Okay. Now understand this. Write down there in inner column. In inner column, 26,30,000 minus 1 lakh. How much it is? 1,34,000. For your reference, you can write it down. For 1,34,000 written there for interest accrued but not due. For interest accrued but not due. How much it is coming? 26,30,000 minus 1,34,000. 24,96,000. But remember that these 1,34,000 we will mention between other current liability. We'll mention it. Okay, first write it down. We have to mention what kind of security is that. Okay, so we have to write it down. Secured by hypothecation of land. Secured by hypothecation of land. Okay, so don't forget to write it down in other current liability, because we have to mention interest accrued but not due. That is notes to account number 5th. So write down there interest accrued but not due on. Interest accrued but not due on borrowings. Write down there 1,34,000. Okay, 1,34,000. Simple. Okay, 1,34,000. Now come to next point that here. What it says that here in trial balance now here. Next is other long term. We have, it's a part of long term borrowing. Okay, long term borrowing. Now next part is what? Other long term borrowing. Other long term loan. That is also part of long term borrowing. But something is mentioned, that is 22,50,000. Okay, but something is mentioned there. Where it is mentioned that here in notes in point number 7. So go to point number 7 and see what is mentioned there. Listen carefully. How much is the total amount that way? And whatever I am writing here, write it down here in question bank. If I am writing something on rapid gist, write it on rapid gist. Okay, if I am writing down here in your question bank, you have to write it down there. If I am writing down here in notebook, same you have to write it down in your notebook. Okay. Now, how much total other long-term loan that I have, which is mentioned that here now, is 22,50,000. Okay, so I will say that now here. How much total I have here? 22,50,000 is the total amount. Okay, if you have not yet received the question bank book, so write it down somewhere in the notebook. This is what I'm writing. The total I have is other long-term loan, that is 22,50,000. But they say out of this here, they say loan taken from the Nexus Bank. How much is 13,50,000 that here now? And out of 13,50,000, 4,80,000 is the something which I am payable within 1 year. So it means that here, let me bifurcate. First listen. Okay, first listen. Then you can pause the video and then write it down. Okay, first listen me carefully. Please listen me carefully. You can pause the video and later on you can write it down that here. Okay, now listen me carefully that here. Or let's do one thing that here. Let me write it down here. Let me write it down here. Just for your understanding, I'm writing it here at the end that here. Okay, just listen, or you can write it down with me. Okay, in cash and cash equivalent, keep the space of 4 or 5 lines, then write it down. Other long-term loans. It is mentioned that it is unsecured. Okay, how much is the amount that they have mentioned? That is 22,50,000. How much amount we have there? We have the amount of 22 lakh 50,000. Okay, now understand this one. They say that here out of these 22 lakh 50,000, 13 lakh 80,000 which we have taken a loan from the bank, Nixel Bank. But they say that out of these 13 lakh 80,000, 4 lakh 80 I am liable to pay within 1 year. It's mean the out of these 13 lakh 80,000, 4 lakh 80,000 is the amount which I am liable to pay within 1 year. Okay, that is short-term borrowing. So let's write it down that here now. Now write it down here now in 3 parts. I'm going to in 3. Okay, so I will say that here now that loan that we have taken from the Nixes Bank that here. Okay, so here now here. Okay, so understand this point. What it mentioned there here, it mentioned that now is the total amount of 4 lakh 80,000 which I am repayable within 1 year. If it is repayable within, write down there, within 1 year. If it is repayable within 1 year, what is going, if it is repayable within 1 year, that now what we call them, we are going to call them here short-term borrowing. We are going to call them short-term borrowings. Okay, we are going to call them short-term borrowings that here. Okay, so this why we are going to call them, it is going to come under short-term borrowing. So write down in short-term borrowing. Why is short-term borrowing? Because it is mentioned in question that out of that 13 lakh 80,000, you can write it down here, 13 lakh 80,000 that here now. Out of this year, what is going to happen now? Out of this year is 4 lakh 80,000 we are liable to pay within 1 year. That's why it is a short-term borrowing. Remember this. Okay, we'll write it down these 13 lakh 80,000 short-term borrowing. Whatever the balance, that is, there is no problem in that. That is not payable within 1 year. So that's a long-term borrowing. So here I will say that now is out of 13 lakh 80,000 minus 4 lakh 80,000 here is going to come that here. How much is coming? 13 lakh 80,000 minus 4 lakh 80,000. That is coming how much here? 9 lakh. That is going to come in a long-term borrowing. That is going to come in long-term borrowing. So write down there long-term borrowings that here. Write down there long-term borrowings there. Okay. Now here long-term borrowings, that is going to come in long-term borrowings that here. Okay, you understand this point? So total, we took a loan of 13 lakh 80,000, something which is payable within 1 year, that is a part of short-term, and remaining is a part of long-term borrowing. But they also mention that now here is the loan taken from the directors. If you remember that when we are discussing notes on any loan that we have taken from the directors or related party, we have to also mention them separately. How much it is? 8 lakh 50. So write down here loan from directors that here. Loan from directors that here. How much is the loan from directors? It is that here now 8 lakh 50,000. That is 8 lakh 50,000. What we call them to this 8 lakh? It is a long-term borrowing, no doubt. Long-term borrowings that here. Long-term borrowings, obviously. Okay, it is mentioned it's a long-term borrowing that is. Okay, now understand this point, very important now. Now what happened? If I see the total here is 22 lakh 50,000, write down other, you can write down other, you can write it down in bracket balance. So how much I have here? How much I have here? Starting 22 lakh 50,000. Okay, just deduct all these amounts, the balancing figure will come. Total I have how much here? 22 lakh 50,000 we have there. Okay, now here remember that in this 22 lakh 15,000 that, then 13 lakh 80,000 from the Nixes that here. So I will say that here 13 lakh, how much here? 18,000, and we have here total 13 lakh 18, then here 8 lakh 50,000 that here. So this balance is going to, right, so 22 lakh 50,000 minus 13 lakh 80 minus 8 lakh 50, that is coming how much here? 20,000. So this 20,000 is a long-term borrowing, but understand the difference here. Write down their long-term borrowings at here now. So what is going to happen now here? When I write it down these long-term borrowings at here, I will show that long-term borrowing from 9 lakh only. Remember that total of the long-term borrowing is not going to come 22 lakh 50,000, because Out of that 4,80,000 which is payable within 1 year, that is a part of short-term borrowing. So total of long-term borrowing is not going to come here 22,50,000. How much the total of long-term borrowing will come? The long-term borrowing from the Nexus Bank 9 lakh, long-term borrowing from the directors, that is 8,50,000, and other long-term borrowing that is coming 20,000. This is how we're going to show that in long-term borrowing that year. But this part 4 lakh, it is a part of short-term borrowing. So this is just for a reference. Obviously, you don't have to write it down this in examination that year. So this is just for a reference, because when you will do a revision that year, you should be in a position to understand all these points that year. Okay, so just write it down for your reference that year. Now we'll write it down one by one. Let's do one thing that year. First, write it down in a long-term borrowing. And I will write it on this 4,80,000 as a part of shop. First, let's write it on these 3 points. So go to notes to account on long-term borrowing. That is notes to account number 3. Write down there now unsecured. Unsecured. That is bank loan. Write down in bracket Axis Bank. Okay. Okay, in bracket write it down. Total amount was 13,80,000 minus 4,80,000. Okay, repayable. Okay, repayable within 1 year. Repayable within 1 year. So that is coming how much? 9 lakhs. Repayable within 1 year. How much it is? 9 lakh. Okay. Now do one thing. Right now, just write it down 4,80,000 also. Okay. Otherwise, we may forget. This 4,80,000 is what? This is short-term borrowing. This is what? Other current liability. Okay. This the interest accrued but not due. But write down this 4,80,000 now. Go to short-term borrowing. Write down there loan from Nexus Bank. Okay, Nexus loan from Nexus Bank, payable within 1 year or repayable within 1 year. Basically, we call them current maturity of long-term borrowing, the portion of a long-term borrowing which we are liable to pay within 1 year. Okay, so write it down here 4,80,000. So write down their current maturity of long-term borrowings. Okay, current maturity of long-term borrowings. How much it is? 4,80,000. Okay. Now again go to long-term borrowing. Now what is, we have written this. We have written these. Okay. Short-term we have written. It's also 9 lakh. Now here loan from directors 8,50,000. Write down there. Write down there loan from directors. Loan from directors. How much here? 8,50,000 and other, the balancing figures. I will mention here also other. So total was 22,50,000. 4,80,000 we transferred to short-term borrowing. 8 lakh on short-term borrowing. 9 lakh is the loan from Nexus Bank. Okay. Minus 8,50,000 that we have taken from directors. So remaining is 22,50,000 minus 4,80,000 minus 9 lakh minus 8,50,000, that is coming 20,000. So write down these 20,000. Simple it is. Okay, done. All of you have written this point. Okay, now here point number 7 also done. Now what happened now here? We have invented, no, short-term borrowing. So something short, okay, we have short-term borrowing. Yes, notes to account, short-term borrowing. Okay, notes to account, the total is 4,80,000, but it is mentioned that now here in point number 9. So what is mentioned is that here loan from Naya Bank, which is a 1,60,000, it is secured. Okay, we are talking short-term borrowing. So loan from Naya Bank 1,16,000 secured. Loan from director. So very simple is that here. I will say that here total we have how much here is 4,60,000. You can see that how much total we have 4,60,000. Out of that here 1,16,000 from a bank which is secured loan and 48,000 from the directors. Remaining will write it down as others. Okay. So go to notes to account number 4 because it's a short-term borrowing. So write down there, loan from Naya Bank. Okay, write down in brackets secured. How much is mentioned there? 1,16,000. Okay. Then we have loan from directors that year, that is 48,000. Directors, that is how much? 1 lakh, oh no, only 48,000. Write down there 48,000. Okay, now understand this now. Now what is going to happen? Now balance, we will write it down. Other, but remember that when I say other, don't get confused. How much is the total amount that they have mentioned here? That is 4,60,000. So write down here 4,60,000, please. Okay, don't do the mistake here. I'm to deduct only 1,16,000 and 48,000. So some of you might get confused, sir. Why don't you deduct this 4,80,000? Come on, this 4,80,000 we have basically it was a part of the long term, but which is payable within 1 year. That's why we write it down in 4,80,000. In 4,60,000, don't deduct this 4,80,000. It will come in negative. Okay, even though it is not coming in negative, don't write it down this 4,00,000. Don't deduct 4,80,000 because 480 was not included in here in this amount. It was a part of long-term liability. Now we write it down in short-term because which is payable within 1 year. Okay, so 1,16,000, 4,60,000 minus 1,16,000 minus 48,000. That is coming 2,96,000. So write it down here 2,96,000. How much is the total that here? 2,96,000. Write down there 2,96,000. Okay, 2,96,000. Simple. Okay. Now here we have inventories which is mentioned in point number 11. But this say finished goods is 45 lakh and raw material is 13 lakh. Okay, so it will go to inventory obviously. But I will read it what is mentioned that here. Okay, in point number 11. So it mentioned point number 11. This is the inventory of finished goods. First of all, they are talking about the finished goods. The where is finished goods? This is finished goods. How much that they have? 45 lakh. So they are talking about these amount. They say the inventory of finished goods includes loose tools costing rupees 5 lakh. Okay, which do not meet the definition of property, plant and equipment as per AS10. So don't get confused that here now. When later on we are going to cover a accounting standard 10, later on it will come that way because first I cover this company's account part, then AS. Okay, so when we'll cover accounting standard 10, there's a definition of property, plant and equipment there. Okay, so here I'm going to say where we'll discuss that here now is if any item, loose tool, if they meet the definition of PP. Let me write it down here for a reference. Okay, write it down. Okay, write down there loose tools. Write down in question bank only. Loose tools. Okay, meet the definition of PP. Space is not PPE. Let me write PP. Okay, not meet the definition of PPE. So meet the definition of PP, not meet the definition of PP. If they meet the definition of PP, these loose tools that here, then it will be called accounting standard. It will be recorded as PP. It will be recorded as PPE. Okay. If they don't meet the definition of PP, then it will be recorded as inventory. Okay, write it down. But don't worry. This point will cover in accounting standard 2 as well as accounting standard 10 because inventory is raised to PP is 10. Okay. Just for a reference right now, just write it down. But detailed discussion is going to come in AS10 that day. Okay, because you don't know the technical definition of PP right now. Okay, it's a detailed definition that day. But remember that any loose tool, if they meet the definition of PP, then PP. If they don't meet the definition of PP, inventory. Simple. Okay. Now, what is mentioned that here now? They say which do not meet the definition of PP. If they do not meet the definition of PP, it means we are going to write it down that as what? Inventory. We are going to write it down as what? Inventory. So, but they say the loose tool is a part of finished goods. How much is the amount? 5 lakh. No problem. So, how much amount I have in finished goods? How much amount I have in finished goods? I have an amount of how much here? 45 lakh. In 45, how much amount I have in finished goods? That is 45 lakh. In 45 lakh, 5 lakh represent what? Loose tool that. Loose tool basically, for example, loose tool is means nut, bolt, that all these items that when you purchase any vehicle that there's a kit which come that here. Those are the loose tool. Nut, bolt, there's certain items they will give them. Okay. So that is the inventory that there. But loose tool have to mention separately. So what we'll do that they provide this loose tool with the vehicle as well. That I'm giving an example of vehicle that here. Okay. So write it down in inventory. So we will bifurcate it. Notes to account number is 8. So write it down here. Finished goods. Finished goods. Okay. Write down in bracket 45 lakh. Minus 5 lakh is loose tool. So what about that will show separately. So write down here 40 lakh. Then write down loose tools. That is 5 lakh. So total is 45 only, but we have to bifurcate finished goods and loose tool that here. Okay. Now we'll go to trial balance again. How much is mentioned that in trial balance? Raw material is how much? 13 lakh. So write down the raw material. Raw materials 13 lakhs. How much is the raw material? 13 lakh. Okay. Now trade receivable. Okay, something is mentioned in point number 3. What is mentioned in point number 3? That trade receivable for piece 4,86,000 are due for more than 6 months. It means this much amount is due for more than 6 months and remaining will be written down as other. So total trade receivable I have 17,50,000. So we'll write it down in trade receivable notes to account number 9. Write down there in notes to account number 9. Write down there outstanding. Okay, write down there outstanding. Okay, for a period. Exceeding 6 months. 4,86,000. Okay, 4,86,000. Now we have here other. So total amount is mentioned there 17,50,000. So 17,50,000 minus 4,86,000. So 17,50,000 mentioned. Yes, 17,50,000. Yes, 17,50,000 minus 4,86,000. That is coming how much here? 12,64,000. Total is going to come same 17,50,000. Okay, we'll write it down in balance sheet later on. How much it is coming? 17,50,000. Simple it is. Okay. Now again go to trial balance that short term. It is mentioned that advances which is short term. So it is asset here. Asset. Okay, there is a heading there, advances, short term advance. It is mentioned. It might be long term, but it is mentioned the short term 3,75,000. So go to balance sheet. You can see that here now. You can see that here short term loans and advances in current asset. How much is the amount that we have here? Is 3,75,000. So write down there 3,75,000. Okay, simple. Then we have here trade payable, current liability. Okay, current liability. How much trade payable? 8,13,000. So current liability 8,13,000. Write down trade payable. No notes to account on it. 8,13,000. Okay, done. 8,13,000. Then we have here provision for taxation, short term provision. We prepare notes to account on it. 3,80,000. So go to notes to account on short term provision, notes to account number 6. Write down there now provision for taxation 3,80,000. Okay, provision for taxation how much? 3,80,000. Now we have unpaid dividend. This is other current liability. Unpaid dividend which you have not yet paid, payable, it's a liability, 70,000. So write down in other current liability unpaid dividend. Write down there 70,000. Okay, next item now That is, we have cash in hand. This is cash and cash equivalent 70,000. We prepare a notes account on it. Notes account number 10. Write down cash in hand. How much it is cash in hand? Outer column write down 70,000. Okay, 70,000. Okay, cash in hand. How much it is? 70,000. Okay, done. Now, write it down there after this. A balance with bank is total amount is 4 lakh 40, but something is mentioned point number 4. They say in point number 4 that balance with bank include rupees 56,000 the Naya bank, which is not a scheduled bank. So if you go to this concept that here, remember that we have to mention them here. How much with we have with we have with a scheduled bank, with a scheduled bank and other. They are not saying this. It's a scheduled bank, which is not a scheduled bank. They are saying. Okay. So write down that here. Balance with bank. Balance with bank. Now under balance with bank, write down with schedule bank, with schedule bank, and with other bank. You can write it down in bracket Naya bank. Now how much amount we have with the Naya bank? 56,000 is mentioned there. 56,000. So we're going to write it down here. 56,000. How much is the total amount mentioned in trial balance? The total amount is how much? 4,14,000. So here we're going to write it down 4,14,000. So how much we have with schedule bank? Can we write it down? Yes, we can find it out. Total amount is 4,14,000 minus 56,000. So 4,14,000 minus 56,000, that is coming how much here? 3,58,000. 3,58,000. Done? Okay. Now we have write it down. We have all the items of trial balance. Okay. Done. These type of question comes from 14 marks. So over a period of time, obviously you have to improve your speed that here. Okay. I will discuss with you the homework today. I will give you homework. How to do that, I will discuss with you. Okay. Each and everything. Now we have covered all the points of a trial balance. Now cross check. Point number 1, 2, yes, tick. 3, 4, 3 cover, 4, 5, 6, 7, 8 is pending. I will discuss with you. 9, 10, 11, all cover. Okay. But 8 point is not going to affect my balance. You will say why? Let me tell you the concept of, let's do one thing that I will discuss with you. Point number 8. Do the total of all the notes account. Write it down in balance sheet. Do the total of balance sheet, then I will discuss with you with this. You will say, why, sir? It will not come in balance sheets. It will come as a contingent liability. I will explain it. Don't worry. Okay. So do the total here now of all the items that here, of all notes to account. Okay. One by one. 80 lakh minus 15,000. That is 79 lakh 85,000. 79 lakh 85,000. Write down here 79 lakh 85,000. Okay, write down 79 lakh 85,000. Then the total of the next, the second one is that how much it is? Reserve and surplus. That is 15 lakh plus 9 lakh 76,000 plus 5 lakh 45, 30 lakh 21,000. 30 lakh 21,000. Write down there 30 lakh 21,000. Okay. Then we have here 13 lakh 21,000. Now third is 24 lakh 96,000 plus 9 lakh plus 8 lakh 50 plus 20. That is coming 42 lakh 66,000. 42 lakh 66,000. Okay. Then write down here 42 lakh 66,000. Okay. Then here we have fourth, do the total of short-term borrowing here. That is 4 lakh 80 plus 1 lakh 16 plus 48,000 plus 2 lakh 96,000. That is coming 9 lakh 40,000. So write down there 9 lakh 40,000. So 9 lakh 40,000 here. Okay, 9 lakh 40,000. Okay. Then we have here 9 lakh 40. Okay. Then here 1 lakh 34 plus 70. That is coming 2 lakh 4,000. So 2 lakh 4,000. So write down here 2,04,000. Okay, then we have here, after this we have 2,04,010. Then with 3,80,000 is the short-term provision. 3,80,000 is short-term provision. Now PP. To the total of PP, 25 lakh plus 30 lakh plus 24 lakh plus 13 lakh. 92 lakhs. So do the total here, 92 lakhs here. Okay, write down here 92 lakhs here. Okay, 92 lakhs. Then we have here is 40 lakhs plus 5 plus 13. That is 58 lakhs. 58 lakhs is inventories. No intangible, no non-current inventories, 58 lakh. Okay. Then we have here, after this 58 lakhs, we have written 50. Now we have trade receivables 17,50,000. 17,50,000. Okay. Now we have a last cash and cash equivalent. Do the total here. That is 70,000 plus 4,14,000. That is coming 4,84,000. Okay. 4,84,000. Write down in balance sheet 4,84,000. 4,84,000. Done. Okay. Now understand this point here. Let's do the total also. 79,85,000 plus 30,21,000, 42,66,000, 9,40,000, 8,13,000, 2,04,000, 3,80,000. That is coming here 1,76,09,000. Let's see here is 92 lakh plus 58 lakh plus 17,50,000, 4,84,000 plus 3,75,000. 1,76,09,000. Okay. Now understand this one. Done. Okay. Balance sheet tally. 14 marks is here. 1 point. Okay. Now understand this. What does it mean that here now? As you can see that here now. In point number, it says they say bills receivable for rupees 1,60,000, which is maturing on 16th of June 2018 has been discounted. If you are from the CA foundation background, you know about it. That what does it mean? If you have come to the graduation route, might be you have covered the bills of exchange, very very common chapter that year. Even in the graduation it's covered. But let me explain you what does it mean that now. Now what happened now? There is a concept called bills of exchange that year. Okay, now please listen carefully. So in that, suppose I'm a person, I sold you something. I sold you something on credit. For example, like now, I have a doubt on you whether you will pay me or not. So suppose I sold you something today, any product. Okay, any product, I sold you some product. And I have a doubt on you whether you will pay it or not. Or even though I don't have a doubt, I need amount immediately. So you say, no sir, I will pay you after 3 months. I say, okay. But I need the amount today only. So what I have done, I draw one bill. I write it down on a page that I am Zubair Khan that here. And I write you then that you are going to pay me, I mean to say you are going to pay me this much of amount, that it is mentioned 1,60,000. So I gave you that here. Listen, I mentioned that you are liable to pay 1,60,000 on these and these that, and you accept it. Now the paper that I have, I call the bills of exchange. So bills of exchange, the paper I have, we call it bills of exchange. So as per the law, I have the option that now these paper, I can take this paper and I go to bank. Suppose there's a third party here also. You, me, I'm the person who sold to you. I gave to you this amount, this paper, and you accept it. Yes, I will pay 1,60,000 on 15th of June 2018. Okay, now I have this paper. I'm here on 31st of March. Okay, now what happened now? Understand this. I am here on, you are going to pay on 15th of June 2018. I am here on 31st of March 2018. This is the balance sheet date. Okay. Now, before the balance sheet date, I go to bank and tell him, listen, one of the person who is going to pay this I'm talking with bank. One of the person is going to pay me 1,60,000, but he's going to pay me on 15th of June. He or she is going to pay me on 15th of June. That I don't have time. I cannot wait till the 15th of June. So what happened that now? Please give me the amount now. I will give you this document that he has accepted and he's going to pay me. So I gave the document to the bank, and he gave me the amount 1,60,000, not obviously 1,60,000 the total amount I mean to say. Obviously, he will not give the complete 1,60,000. He will deduct some their bank charges. We call them discounting. That's different, but he will deduct certain amount. He gave me the amount. So I have already received the amount from the bank. Okay, I have already given that document to the bank. Now, what is the benefit of the bank? On 15th of June, bank will come to you and you have to pay to the bank. But on 31st of March, before the 31st of March, I went to bank. I gave this document to bank. He gave me certain amount to me. Okay, done it is that here now. But what happened here now? On 31st of March, there is nothing between you and me. Nothing is payable, receivable between you and me. Why? Because the document you gave me, we call them bills of exchange, we call them bills of receivable, because amount is receivable from you. And for you, it is a bills payable. But on 31st of March, it is not a receivable for me at all from you. The reason that I have already discounted with the bank. I already given to the bank, already bank gave the amount to me. Now, on 31st of March, there is no transaction pending between you and me because I have already received the amount. Now, there is a transaction which is pending between you and bank because on the due date, 15th of June, by law, bank is going to come to you and you are going to pay to the bank. Okay. So on 31st of March, I don't have to write it down anything because I have already settled the amount with the bank here. I don't have to come to you. Okay. I don't have to record anything there. But the problem is that here now, if suppose on 15th of June, if bank is going to come to you, you are going to pay 1,60,000 to the bank. But if you fail, I'm saying if you fail to pay 1,60,000, who is liable to pay to the bank? I am. I am liable to pay to the bank because I told him that now give me the amount, they gave me the amount to me, then they are going to recover from you. I give that document to them, which is you signed on that document. But if you're not going to pay, if you default on payment on the 15th of June, the bank will come to me. So then in that case, I am liable to pay. So it is not a liability for me. We call them contingent liability. Okay. So we are liable to, I might be liable. I'm not liable to pay. I might be liable to pay if you, I'm talking to you, if you fail to pay to the bank. That's it. Okay. So in my books of account, it is recorded as contingent liability. So it is mentioned in your, these repeats that here. If you go to the page number that 10, so you can see that now in page number 10 that now they have mentioned there here is third part. Okay. Bills receivable of rupees so and so maturing has been discounted. Maturing after the balance sheet has been discounted. So what I will show you the contingent liability notes to account. So you can write it down at the end also that here, or you can also write it down below the balance sheet. So we'll write it down below the balance sheet. You can write it down at the end also. Write down one note here. Write down one note there. So there is a contingent liability. There is a contingent liability amounting to rupees 1,60,000 of bill discounted but not matured. Matured means that 15th of June is not yet come, but we have discounted that here already. So there is a contingent liability. There is a contingent. I might be, chances low, I might be liable to if you fail to. How much? 1,60,000 of bill discounted. Bill discount, the amount that I have encashed with the bank, but it is not yet matured, means 15th of June not yet come. So just we have to mention here in notes to account. Okay, that you can mention below the balance sheet. Okay. So these type of question comes in examination for 14 marks that here. And let me tell you honestly that here, it is not at all difficult. You just need to do a practice that here. And you have, trust me, you have so much of caliber. And don't always, when you set a target that year, never set a target. No, if I score 15 account, that is more than it. No, not at all. You have to make a target for 80 plus in accounts. Your target should be so high. Your target always be so high that year. You got the point that here now. So make a high target that year. It should be of, I mean to say the 80 plus in accounts, and you have to, and you can achieve it easily that year. It's all about the discipline that year. People say, no, the passing percentage is so low, 15-20%. What's the problem in that? Come 20%, let's come 10%. You have to really work hard to come in those 10-15% that year. You really have to work hard. And this is the time to work hard. Once you clear inter, you will be focused then on articleship and all that. You will start that year. And once you become a CA, nobody is going to ask you anything that year. Here, if your parents are still pushing, no, have you have done this, that, they are worried about you. That's why they're asking you. Your neighbor is not going to come to you. He's not going to ask you how your study is going on that year. Your neighbor is not worried because he doesn't care that year, whether you clear or not that year. For parents, your parents, it is important that year. Please work hard. Please work hard. And let me tell you honestly, your life is going to change completely that once you become a chartered accountant. I'm not saying you are not going to hard work after C. Still, once you become C, still you're going to do the hard work. But you will financially, you will be strong that year now. Now you will get so much of reputation in the society, and the main thing is the confidence you will get once you become a CA is at next level that year. Okay, so trust me, you have so much of potential, and this is the time to study that. I mean to say that here, focus here and they just focus on your studies there only. Okay, so what we'll do that here, next question it will take obviously time. So let's take the break for 10 minutes that here now, and then we will continue with we will start a new question that take a break for 10 minutes. Hello, all of you. Now come to question number 3. So it came in mock test paper May 2025 and onwards. Mock test number was 3. So there are total 8 mock test paper which is issued by ICI in May 2025 and onwards. Okay, to total 8, but it is a mock test paper number 3. In mock test paper number 2, September 2024, this question is on balance sheet. Simple question. Okay. Now it says that you are required to prepare a balance sheet as at 31st of March 2024 as per Schedule 3 of the Companies Act 2013 from the following information of Vishnu Limited. So they gave us that a term loan secured 40 lakh, trade payable 45 lakh 80,000, cash and bank balance 38 lakh 40,000, staff advance 2 lakh 20,000, other advances given by company 14 lakh 88,000, provision for taxation 10 lakh 20,000, securities premium 19 lakh, loose tools 2 lakh, general reserve 62 lakh, investment non-current 9 lakh, profit for the year 32 lakh. Then we have trade receivable 49 lakh, miscellaneous expenses 2 lakh 32,000, loan from other parties 8 lakh, provision for doubtful debt 80,000, stores 16 lakh, now finished goods 30 lakh, and plant and machinery WDV 2 crore 14 lakhs. Now additional information, share capital consists of 1,20,000 equity shares of rupees 100 each fully paid up, 40,000 10% redeemable preference shares of rupees 100 each fully paid up, write off the amount of miscellaneous expenses in full amounting rupees 2,32,000, staff advances, other advances are considered as short term. Okay, so simple question is that now the new point here, basically this is a new point. Okay, I will discuss with you. But now the same question, first they ask you to prepare what? They ask you to prepare what? From the balance sheet only. Prepare the balance sheet. So the same question, first we have to decide that here. First of all, notes to account. So which notes to account we have to prepare? If you remember, I told you that here we are going to prepare share capital. Okay, we are going to prepare, just give me. Okay, here we are going to prepare on equity. Okay, okay, write down there on equity. Okay, equity. Then we are going to prepare on liabilities, then on what? Asset. Okay, then on what? Asset here. Okay. Now what is going to happen in case of a liability that here now? Share capital, okay, reserve and surplus we have to prepare. Okay, share capital, reserve and surplus. Here we are going to prepare on long term borrowing that here. Okay, long term borrowing that now we have to prepare. And then here is the now we have to now here the on PP also will prepare in property, plant and equipment. Okay. Now apart from this, we'll see on which they have, if they have adjustment, we can also prepare on short term provision as well, that because they have a provision for tax, so we can prepare on short term provision that now. Okay, inventory also. Why inventory? If you see that here, the different types of inventory is mentioned, loose tools. Okay, then here finished goods stores, so we are going to prepare on inventories as well. Okay, on inventories that here now here one more thing is that, as you can see, the provision for doubtful debt. Basically, provision for doubtful debt, they have a credit balance, but we don't write it down on liability side. We show as a deduction. Okay, we show as deduction from trade receivable. Okay, so we'll make a one note so on trade receivable as well. Trade receivable. Okay, so these much notes so on we have to prepare. Okay. Anything else, non-current profit to trade receivable, miscellaneous. What is miscellaneous expense? I will come to that. Okay, they mentioned something about the miscellaneous expenses, but no need for the notes to account for that. Okay, I will discuss with you that. So let's draw here. Now here, if you see that there is one adjustment in the share capital that they have. Okay, miscellaneous expenses. Okay, now staff advances and other advances. Basically, that they have mentioned that these staff advances and other advances, they say it should be treated as what here? It should be treated as short-term advances that we have given. So if we want, we can make a note to account on advances as well. That how much that they have here is, if you can write it on directly also, that is 2,20,000 and 14,88,000. It is mentioned that here it should be treated as what? The short term. So because when we give the advances, it might be long term or it might be short term. So they specifically mention that it should be treated as short term. If nothing is mentioned, then generally we treat it as short term only. Okay. So what we can do that now, we can make a note stock on all that also, because there are two items. So short terms, okay, short term loan and advances. Okay, short term loan and advances. Okay, done. Now one more thing is that here now, this is the one point which is mentioned that here I will discuss with you that here now, is that they have mentioned about here is the provision for tax, loose tool, general reserve, that they have taken certain loan. Okay, loan from other related parties. It is mentioned that there is 8 lakh that. Okay, now what is going to happen that here now, it is not mentioned in question that loan from other parties that whether it's a short term or long term. It is not mentioned that. Okay, so we have to take an assumption that it's depend on us. We may call it a short term also, or we can call it a long term also that. Okay, so we have taken from the loan from other parties, not related, from other parties. Okay, no problem, but we have taken a loan, so that loan may be short term or it may be long term. Whatever we are treating, is it mentioned anything about the loan that short term or long term? Okay, nothing is mentioned that here. So we have to take a call that now it's depend on us that if we take a short term, we'll write it in short term. We'll write a note there that we are considering it as short term borrowing. If we can write it in long term also, then we have to write a note we are considering as long term. In fact, I don't think there is any other point on the long term here. Okay, so I think there's no need to prepare long term borrowing. Generally, there is a long term borrowing always they give, but I don't think it's any point, only one loan. So it depends on us. If we are considering it as a long term, then we have to write it down, or if you are considering short term. So if I say short term borrowing in that case, so what we'll do that now, instead of long term, we will prepare a notes to account on what? On short term borrowing. So what we'll do that is we'll consider as what? Short term borrowing that here now. Okay, so we'll write a note that is, we will assume that this loan from from other parties, it's a short term borrowing. So we'll assume that we'll write it down in short term borrowing. You may also assume the long term, but we have to write a note on it because the clarity is not given. Okay, I'm going to say they have not mentioned with the short term or long term. So it's depend on us. If someone is writing under long term, nothing wrong in that. Okay. Okay. So we have to prepare these notes on 1, 2, 3. 1, 2, 3, 4, 5, 6, 7, 8. Now, one more thing important that here now, you might think, sir, you have not decided on the basis of the information is given. The share capital, we have already prepared on share capital. Then we have a miscellaneous expense. What is, I will discuss with you because it is going to be adjusted in reserve and surplus. So we adjust in, I will tell you what is the reserve and surplus. I will discuss with you. Okay. So reserve and surplus we already made, and they say the staff advance and the other advances are considered as what? Short term. It is mentioned that it's a short term loan and advances. Okay, we have given short term loan and advance, and here also they have not given us the trial balance, okay, properly. They have given the item of trial balance only, but they have not mentioned here like a debit balance, credit balance. We have to judge it whether it's a debit balance or credit balance. Okay, simple. Now write down here question number. Okay, write down question number. This is 3. So question number 3. Okay, Vishnu Limited. Vishnu Limited balance sheet as at or as on 31st of March 2024. 31st of March 2024. Okay, just give me a minute. Now you know the format that in every question you have to draw in similar, like, okay, write down. First write down, then we'll give the number of notes to account it. Okay, so write down there one by one. Okay, first here is a note amount. Okay, then first is equity and liability. Equity and liabilities. Shareholders fund, write down there shareholders funds. Okay, and the shareholders fund share capital. Point number B, reserve and surplus. Reserve and surplus. Non-current liabilities. Non-current liabilities. Long-term borrowing. Long-term borrowings. Then here third point, okay, current liability. A, B, C and D. Write down there short-term borrowing. Short-term borrowings. Trade payable. Other current liabilities. Then short-term provisions. Short-term provisions. Okay, now short-term provision. Now do the total here. Total means write the total. Okay, then here asset side, write down their non-current asset. Non-current asset. Property, plant and equipment. Property, plant and equipment. Intangibles. Non-current investment. Non-current investment. Now here is current asset. Okay, write down there now. Inventories, trade receivable. Okay, inventories, trade receivable, cash and cash equivalent. Okay, cash and cash equivalent. Okay, then short term loan and advances, other current asset. Now we will write it on notes to account number. So how many notes to account we have? Total 8. But one more thing is that, as you can see, the term loan. So it is generally long-term borrowing only. Okay, so we can make it on long-term borrowing. So let's make it on long-term borrowing. That is our favorite, long-term borrowing. So let's make it long-term borrowing. After that, they have 1 point here. Okay, so we have total how many notes to account? We have total 9 notes to account. So 1, 2, 3, 4, 5, 6, 7, 8, and 9. Okay, now write down one by one. Share capital that we have here, 1, reserve and surplus. Long-term borrowing we have 3, short-term borrowing 4, short-term provision 5th, then PP is 6, then we have inventory 7, trade receivable 8, cash. Okay, and then we have short-term loans and advances. This is 9. So total how many notes to account we have? 9. So now we have to write it down one by one, each of them. Okay, 9 notes to account we have. Write down there now. Notes to account. Notes to accounts, write down one by one. First is share capital. First is share capital. Keep the space of here, share capital 6, 5, 6, 7 lines. Okay, then here, second here, reserve and surplus. Reserve and surplus. In reserve and surplus, there are more items here to keep the space of 6, 7 lines. Then here, third, long-term borrowing. Long-term borrowings. Okay. Then we have here, keep the space of 2, 3 line only. Fourth is short-term borrowing. Short-term borrowings, right? Keep the space of 2, 3 lines. Then fourth one that we have is short-term provision, then PP. Okay, so fifth one is short-term provision. Keep the space of 2, 3 lines. Then sixth one is PP. Property, plant and equipment. Okay, property, plant and what? Equipment. 6. Then we have here, seventh is inventories, then trade receivable. Seventh is inventories. Okay, keep the space of 5, 6 lines. Okay, 4, 5 lines. Okay, then we have here, after inventories, eighth one is trade receivable, then short-term loans and advance. So trade receivable. Okay, then here short-term loan and advances. Short-term loan and advances. Done. Okay. Now, very simple is that now here, just we have to one by one we'll read it and we'll write it down there. Okay, very simple. Now, first is that you can see term loan. So term loan secured. Okay, no adjustment. It's a long-term borrowing. So write down in long-term borrowing 40 lakhs. So write down long here term loan secured. How much it is? 40 lakh. 40 lakh. Okay, no adjustment. Then trade payable, it will go in balance sheet. Trade payable 45 lakh 80,000. So write down in balance sheet 45 lakh 80,000 trade payable. 45 lakh how much? 80,000. Then we have here cash and bank balance. It will go to cash and cash equivalent. Very simple question. But You have one new adjustment I will discuss with you. 38 lakh 40,000. So cash and cash equivalent directly in balance sheet. 38 lakh how much here? 40,000. 38 lakh 40,000. Simple. Then we have here staff. It is already mentioned in question. It's the here the short-term loans and advance. So short-term loan and advance, same short-term loan and advance. First of all, we have given by company. It means we have given to them. It's an asset. Okay, we have to take a call. The staff advances, we have given the advances to staff. Staff never give us the advances to employer. Okay, so other advances we have given to somebody. Given by company, we have given. It's an asset. So we make a notes to account on it. So go to notes to account on short-term loans and advance. That is notes to account number 9. So write down there staff advances here. That is how much here? 2,20,000. Then we have here is short-term, the other advances 14,88,000. So other advances 14,88,000. 14,88,000. Okay. Then we have here provision for taxation. It's a short-term provision. We make a notes to account on it. 10,20,000. So write down in short-term provision. Provision for taxation. Provision for taxation. That is how much? 10,20,000. Okay. 10,20,000. Then we have securities premium. It will go reserve and surplus. 19 lakh. So write down in reserve and surplus securities premium. $19 lakh. How much it is? 19 lakh. Okay, right. 19 lakh. Then we have here loose tools. It is inventory. Okay, it is inventories that here 2 lakhs. So write down there in inventories notes to account. Okay, write down there loose tools. Okay, that is how much here? 2 lakhs. So write down there 2 lakhs. Okay. Then we have here general reserve, reserve and surplus. How much? 62 lakh. So we'll go to reserve and surplus. We'll write it down there general reserve. How much it is? General reserve is how much? 62 lakhs. So write down there general reserve. 62 lakh. Okay. Then we have investment non-current. So it is non-current investment, simple 9 lakh. Balance sheet, asset side, 9 lakhs. So write down in investment, non-current investment. What is the amount here? 9 lakhs. So write down here 9 lakh. Okay. Then we have profit for the year. So this is the profit for the, we are not preparing P&L account. That's why they have given the profit in next session. Okay. We'll discuss about the P&L as well. 32 lakh. Where it will go reserve and surplus. But remember, there is one adjustment of this miscellaneous expense. I will explain you. They have a connection with this profit and loss account. So I will discuss with you. But remember one thing, this 32 lakhs, you have to write it down in reserve and surplus in inner column. So write down the profit and loss balance. How much it is that? You can write it down like the profit and loss balance. How much is that here? Is 32 lakh. Okay, 30. Write down inner column because there is one adjustment there. Okay, I will discuss with you. Then we have here trade receivable. So it will come under trade receivable. Okay, 49 lakh. So trade receivable, notes to account number 8. So write down their trade receivable. How much is the amount? Is 49 lakh. Okay, so trade receivable. $49 lakhs. Okay, trade receivable is how much? Is 49 lakh. Okay. Then it says that miscellaneous expense. Let me now point number 2 is mentioned that miscellaneous expense. So you can write it down here in bracket like this. Point number 2. Now what happens? First of all, miscellaneous expense is an expense that here. So where the expenses go to profit and loss account. But whether we are preparing P&L account, apply your logic that here. Miscellaneous expense, it is an expense. Where the expense go, it will go to P&L account. But whether we are preparing here P&L account, the answer is no. We are not preparing P&L. Already it is prepared. They have given us the profit. But this miscellaneous expenses, they have not yet write it down in P&L account. So we have to reduce the profit. So it is what mentioned in point number 2 also, that here they say write off the amount of miscellaneous expenses in full amounting rupees 2 lakh. Write off means cancel it. So miscellaneous expense have to be cancelled it that year. What is the amount of miscellaneous expense? 2 lakh 32. You can see that 2 lakh 32,000. So it has to be cancelled. There is an expense. So how to cancel? To reduce the profit. Okay. So go here in reserve and surplus. Write down there less miscellaneous expenses written off. That is 2 lakh 32,000. So 32 lakh minus 2 lakh 32,000, that is coming here 29 lakh. Write down in outer column 29 lakh 68,000. Okay, so don't get confused sir, what is the second effect. Understand this point, that miscellaneous expense is an expense in an account. You're writing off, you're cancelling that. So that miscellaneous expense account get what? Cancel there. So now go to the root of accounting always. Miscellaneous, it is an expense first of all. You're cancelling an expense, so profit will reduce. So basically the expense you're adjusting against the profit. So profit will get reduced here by 2,32,000. Okay, we are not preparing P&L account here. Okay, we are not preparing P&L account. So generally it will go to P&L account. I will discuss with you when the question will come of the P&L account. So here just they say adjust it. So where should we adjust it? Obviously we have to reduce the profit. It's an expense that here. Okay, now this point number 2 is done. 3 is also done. That now we have covered that staff advances and other advances. Okay, now then we have here loan from other short-term borrowing. Write down in bracket assume. So we assume that it's a short-term borrowing. Okay, that is how much? 8 lakh. Now loan from other parties 8 lakh. Write down there is short-term borrowing. Loan from other parties. Write down in bracket assumed short-term borrowing. Okay, how much is the amount? 8 lakh. So write down there 8 lakh. 8 lakh. Okay, then we have here provision for doubtful debt. What we have to do? We have to deduct it. This provision for doubtful debt, that we have to deduct it. Okay, from trade receivable. How much? 80,000. So provision for doubtful debt, we have to deduct it 80,000 from trade receivable that year. The provision has a credit balance, and this provision for doubtful debt, it means we have a doubt that we are not going to receive the amount. So trade receivable, we have a doubt that here. Okay, so we have to adjust this provision for doubtful debt against the trade receivable. So go to trade receivable notes to account. Write down that less provision for doubtful debts. How much here? 80,000. Correct? 80,000. Okay. Stores is inventory. Same finished goods is also inventory. The stores 16 lakh. So we have some inventory in stores that here. Write down there. Inventory notes to account number 7. Okay. Write down there now. Stores. How much we have here is 16 lakh. 16 lakh. Then we have finished goods 30 lakh. So finished goods 30 lakh. 30 lakh. Then we have here plant and machinery. This is PP. There's no adjustment there. 2 crore 14 lakh. So write it down in here. Plant and machinery. Plant and machinery. Plant and machinery. How much it is? 2 crore 14 lakhs. Okay, 2 crore 14 lakh. Plant and machinery. This is WDV. Okay. Then all the items that we have written now, additional information, they have just mentioned here the share capital that they have here 1,20,000 equity shares of rupees 100 each and 40,000 10% redeemable preferential of rupees 100 each. So both equity shares and preferential both are share capital that here now. Have you ever heard the word redeemable that now? It will come in the next chapter. Buyback. This buyback chapter is going to, we are going to cover. The next chapter is buyback, where I will discuss redeemable preferential. But preferential is also the share capital. Okay. Now write it down now. Share capital. So here 1,20,000 equity shares of rupees 100 each. Of rupees 100 each. Okay. Okay, that is here how much? 1 crore 20 lakh. Then we have 40,000 10% redeemable preference shares of rupees 100 each. So 40,000 multiplied by 100, that is 40 lakhs. Done. Okay, so we have written all the points here. Okay, now just we have to do the total and write it down in balance. So one by one. So first we have 1 crore 20 lakhs and 40 lakhs, that is coming 1 crore 60 lakhs. So write down in balance sheet 1 crore 60 lakhs. Then reserve and surplus. The total of this reserve and surplus 19 lakh, 62 lakh, 29 lakh, 68,000. That is coming here 1 crore 10 lakh 68,000. Okay, write down 1 crore 10 lakh 68,000. Okay, then we have long-term borrowing 40 lakhs. 40 lakhs. Okay, then we have a short-term borrowing 8 lakhs. 8 lakhs. Then we have here provision for tax 10 lakh 20,000. Okay, then we have here plant and machinery 2 crore 14 lakh. Okay, then we have seventh is that here is loose tools and this inventory, basically 2 lakhs plus 16 lakh plus 30 lakh. Okay, that is coming 48 lakhs. 48 lakhs. Okay, then we have trade receivable that now 49 lakh minus 80,000. That is coming 48 lakh 20,000. So write down there 48 lakh 20,000. Last is short-term loans and advances. That is 2 lakh 20,000 plus 14 lakh 88,000. That is coming here 17 lakh 8,000. Okay, 17 lakh 8,000. Okay, done. Now we have to do the total. That is coming 1 crore 60 lakh plus 1 crore 10 lakh 68,000 plus 40 lakhs plus 8 lakhs plus 45 lakh 80 plus 10 lakh 20. That is coming 3 crore 74,000 68,000. 74 lakh 68,000. Now 2 crore 14 lakhs plus 9 lakh plus 48 lakhs plus 48 lakh 20,000 plus 38 lakh 40 plus 17 lakh 8. That is coming here 3 crore 74 lakh 68,000. Done. Okay, now question has been finished. Only that miscellaneous expenses point was new year. Okay, now I will give you the homework today. You will get the homework here now. Here, write down the homework for today. Write down there now. Here the homework for today is, okay, homework. Okay, now homework is that here now, if you go to the question bank, homework question number 15, and okay, first of all in question number 15, it is simple that now it is like the question number 1 and 2 only that here. So this is the one, this new point which is I've highlighted. This is a question bank, page number is 13 that here. Okay, you can see that now they say the company had contract for the erection of machinery at rupees 1,50,000, which is still incomplete. So basically, if certain commitment that we have, which we have not yet completed. So as per the schedule 3, we have to mention in the notes to account if we have certain commitment, we have not yet completed those commitment. So we have to mention, for example, we have the commitment of the contract for the erection of machinery. So we have not yet done, which is still incomplete. So we have to mention just in the notes to account. You can see that here that they have to mention somewhere. You can see that here now. At the end, they have mentioned this estimate amount of contract remaining to be executed in capital account and not provided rupees 1,50,000. You can just copy paste the same sentence here also that here. That the company had a erection for the contract for the erection of a machinery rupees 1,50,000, which is still in there. Copy paste you can do. So if you go to this, the rapid gist book, it is somewhere it has to be mentioned. You can see that rapid gist page number that now 10. So the company had contract for the erection of machinery, which is still incomplete. Show a commitment in notes to account. That's it. We have certain commitment. If we have not yet done, we have to mention that. Okay, that is only the new point. Nothing special here. So question number 15. All other points are you are familiar with that. You have to solve that. Okay. Now after that, here you have a question number 16. 17 is also homework. Okay. So this is simple question. That 17 is homework. Okay. You can do it. Is anything new here? Okay. Let me see that. Okay. Now here the first is okay, cost okay, trade receivable okay, amount of okay. Now understand that now. If you come to page number 21, we are discussing here question number 17 now. What is mentioned that now? Here they say that amount of balance with bank include rupees 18,000 with a bank which is not it is not a nota, it's not a scheduled bank here. So they say it is not a scheduled bank. Okay, so understand this, please focus here. The solution is given for this. Okay, so you can see that here now, and this is okay, which is not a scheduled, and the deposit of rupees 5 lakh are a period of 9 months. So how much balance we have with a bank? So we have a balance with bank is 17,29,000. So understand this now. You can see the one notes to account on this 17 lakh. This 70, how it is mentioned that here. Okay, now understand that here. So here they have mentioned that now deposit with bank is a 5 lakh. Okay, now they say which is not a scheduled bank, which is other bank, we call them this 18,000, and which is with a bank deposit for a period of what, 9 months, 9 lakh. So how they have with a scheduled bank that they have calculated total amount which is mentioned that in question that here now. The total amount is how much? 17,29,000. So 17 lakh here, 29,000 minus that we have 18,000 minus 5 lakh. Okay, so we have mentioned that bank deposit for a period of 9 months that here. Okay, so how much we have? 17,29,000 minus 18,000 minus 5 lakh. So that is coming 12,11,000. This is how they have calculated there. Okay, but this cash in hand is mentioned. It is not necessary. You can mention that now cash in hand separately also. I'm just cash in hand first, then you can give the detail of the with scheduled bank, with other bank, and we have a other bank balance means that a bank deposit for a period of 9 months. So you can show them it's a deposit, bank deposit for a period of 9. This fixed for a period of 9 months. So we have to show them separately there. Okay, done. Now this is a new point here. So let me highlight that here, because when I will tell you at the end of the chapter the LMM question, so at that time I will mention all these there. Okay, unsecured loan include rupees 2 lakh from a bank and rupees 1 lakh from a related party. So we have to mention. Okay, now it is easy, you can solve. Now this is also a new point. Entire amount of preliminary expenses to be written off by adjusting the opening balance of general reserve. Now here it is specifically mentioned that better the miscellaneous expense preliminary, in a previous question that we solved in class, there it was a miscellaneous expense. Here they're talking about the preliminary expense. It has to be write off against the general reserve. So whatever the amount of preliminary expenses it is mentioned in the question, it should be mentioned in question obviously, that they are going to adjust against what? General reserve. So these preliminary expenses basically that they have deducted from the general reserve. In the question that we have solved, that we adjusted against the P&L account, because it is not mentioned that to adjust against the general reserve. So it is specifically mentioned that to adjust against the general reserve. That's why we have deducted from it here. Okay. But these two questions is homework for today that now. That is question number 15 and question number 17 that here. Okay, so take your time, easy that you're going to solve two questions today. Okay, question 15 and 17. I am telling you that now consistency is very, very important. You have to be super careful that when we talk about the consistency that here, I'm going to say daily watch one lecture and do the homework properly that day. Okay. So don't say that, no, I will do the homework later on that day. No. You have to do the homework, and there is no need for a separate book for this question, the question that day. You just have to solve in the same notebook. You have to solve this. Okay. Now that is for today. So you know that here now. It is very important. You are going to score 80 plus in advanced accounting. I know that here. You are going to score 80 plus in advanced accounting. I'm waiting for the day the result will come out and you will score 80 plus in advanced accounting. You will send me a message that, sir, yes, we score 80 plus in advanced accounting that year. And you can do that here. So it is very important that now, certain time it might happen in life. I don't know whether it's happened with you or not, but it's happened with people that year. Certain time you might feel some isolated that year. You're not at that age, but still it might be happen that is. That's why I'm saying that here. So certain time it might be happen you feel so isolated that here now. It might be happen in your family that year, extended family I'm talking about that year. Your relatives that here now, they are not giving that here, or I mean to say that much of importance that here now, or you feel certain time that here you're not welcome in some gathering that year. You're so small for all these, but it might be happen you have faced this issue that here now. So this is very important that let me tell you honestly that here, this is the time to focus on your studies that year. Once you become a chartered accountant, everyone is going to follow you that. So you don't have to worry for that. You just have to focus on your study that year. And whatever people are doing, just ignore those points. Just you have to focus on your study that year. You are going to shine one day. Definitely you're going to become a chartered accountant. And I believe that year, 200% you're going to become a chartered accountant that year. Just work hard. If you feel down, if you have any doubt, you can drop me a message anytime on Telegram. Just drop me a message anytime. I will give you a reply there. Okay. So that is for today. Take care all of you. Bye-bye.